What's going on, everybody out there? Welcome in. We're going to have a pretty fun and exciting, well overdue stream today with my good buddy Gerardo. I last saw Gerardo in Las Vegas, Nevada for the PulseCon last year, and that was our actually first time ever getting to meet face to face. It was actually kind of cool because it was me, DCC, and Gerardo, and I think he just posted that picture on his Twitter. So there's evidence of said meeting, and it was a seminal moment for us because there we found ourselves 3 gigabrains in the Hex community wondering, when is the Hedron pump going to end? And it was. I'll tell you what I can tell you about it is that we predicted the end of the Hedron pump last summer within a 48-hour margin of error. So that was pretty cool. We all had kind of the same general thesis and conclusion. So huge shout outs to both of those guys. I got with me today Gerardo. Welcome to the show, brother.
Hey, thank you, man. Pleasure to be here. Yeah, I just posted that picture. I hadn't thought about that in a while. We did call the Hedron top, didn't we? Like within a
behind closed doors. I'm pretty sure there's evidence of that. There's a little bit of feedback coming through on your end.
Oh, there's a bit of feedback. Okay, let's.
Yeah, I can hear myself.
Okay, let me move my audio source from my big old speaker system to just my computer.
Stizzy,
that should be better.
Are you a Halo pro? Yeah, dude. I used to play. I was a top player. You know, I didn't ever place in the top 8 nationally, but I was a top 16 player. So yeah, that was the old days. Yeah, that sounds a lot better. Thank you.
Savage. Yeah, a lot of crypto bros come from video
gaming, man.
Sure.
It's PvP out here, bro.
It really is, dude. It really is. It feels like it sometimes. But yeah, no, I remember. I think we called the Hedron top based off like, I know what I called it based. It was like the backing of one Hedron, and it was like we were right there pretty much. And everyone else was calling for like a 10x to go based on some fundamentals. I was like, bro, you guys forgot the 10x bonus multiplier for like early claimers. So like that probably got a lot of people wrecked. I won't mention, but there were certain streams that were shilling Hedron so hard at the very top. And I was like,
yeah. So I kind of felt similarly, as much as I didn't want to admit that the top might be in. And because it was basically because of the inflation rate. Now, at the time it was Silver, the Antidote, myself, and Sloth running a Discord channel, and there was like over 100 members in there, and so that was all in the heat of, literally and figuratively, in the summer there in Nevada, in the heat of it all, and Hedron's at the top, and if based on the chart, like how it looked, it looked like it could do what Hex did in the early days, where it could explode off that top and go do like a Godwell level pump. But that's not what we saw, and I think so it was very cool that we recognized early the 10x. I don't think I ever published anything about that publicly, mostly because I was out on a vacation at the time anyway, so I wasn't going to go do that. But the Discord guys got that maybe like 3 days after it happened. So there was still a couple times, if you remember, afterward. Then it did a double top, so there was opportunity to sell those tops.
It did, yeah. It was a good run. It was like
30x, right?
30x in a bear, like it was a good run, dude.
It was the only thing moving back then for the Hex guys, or what we were used to. We were still kind of had the what's that, when the honeymoon phase of the Hex bull run still. So we thought that was still normal. Now this year that stuff feels like a moonshot at this point. Especially after like the Pulse launch. I don't know if you wanted to weigh in on your take on the whole launch and like, what you personally maybe speculated on or how you saw that all play out.
Pulse launch? I thought it went well, especially relative to other chain launches. I'll give the example of Shibarium, the whole L1 that the SHIB guys launched, and they had their hiccup. And I actually looked it up the other day. I was like, how are these guys doing? I hope they're not wrecked, because like, sure, it's PvP out here, but I don't hope people get wrecked out here. So I checked. I'm pretty sure they were able to clear out their bridge, which, hooray, right? Like weeks later. So I would say the PulseChain launch went well. Like we didn't launch the bridge. The bridge didn't launch with the chain. It's kind of like, let's make sure everything works right. It got clogged for a while, but it wasn't unclearable, which, Yeah, it wasn't an existential threat. Rather, it was just a kind of like an issue based on demand, which is, I would say, a good problem to have. I think it went relatively well. PulseChain came out, got airdropped. Everyone was able to claim their coins and got dominion of them at $0 value. Then pools were created, bridge opened later. It was a smooth launch, in my opinion. We got a nice little top for PulseX, Hex on Ethereum, Hex on PulseChain. Give a lot of people an opportunity to cash out probably more than they sacrificed. And
Dude, I got a super cool data point on that, but continue.
yeah, I mean, that's what we're here for, is the data. I love axisALiVE data. That's pretty much it, dude. Like, we had that top, and now we're below sack rates on both.
On the 2x, right? On the 2x multiplier bonus, even we saw on Pulse even. So
right.
That was
2.5x is the highest. Remember that.
So we're there then, right? We tapped that level then, roughly. Right?
Pulse seems to be respecting it nicely. Yeah. It's closed a few daily candles beneath that 0.00004 level, but I don't think it's closed weekly candles. Like full market structure beneath there. So that's cool.
And that's a really good point too for like the viewer. Like, so if you're if you're listening in and you don't do TA or stuff, what matters is those longer time frames, like the monthly candle and the weekly candle. Like if you close hourly candles below key levels, that doesn't even matter. And dailies even sometimes can get invalidated. So yeah, Gerardo makes a great point that when you're analyzing a price chart, make sure that you're starting on the bigger time frames and then working your way down.
Like after the Ethereum launch, we got a wick down to 15 cents, which was on Kraken at the time, and that's what, like 50%, 50 to 60% beneath the best rate that those guys who gave up their BTC for ETH during the pre-sale got. So even the ETH guys, like, I know everyone says like, oh, we never went below ICO rate. Well, no, it did on a wick. To your point, though, it was like an hourly wick. But full daily candles never went below that like 30-cent region on Ethereum. So it's interesting seeing the parallels between, if you line them up, I almost dropped a video on this the other day. If you line up Pulse and ETH from launch, whew, I don't know if you've done that.
I would do it, but they took the Pulse chart away.
On TradingView?
On TradingView. Because I think at least the one that I was looking at was the OKX chart. Yeah. And they got rid of the full hex chart from HitBTC. So like we're getting cut out at the knees over here, folks. But we still make it happen. That's why we have Gerardo's site, so he could actually pull all the data together and give us a chart.
Yeah, they don't make it easy out here.
No, they don't. It's kind of annoying because DeFi needs to figure its shit out in terms of even like, here's another one, like with the PH Universe exchange, like you don't have, not to my knowledge, we don't have charts for those pairs, which is it'd be nice, right?
We don't.
I don't think we do. I don't think we do. If we do, I would love someone to tell me. If we have charts for those pairs. I did want to back up and just speak quickly on if you sacrifice. So this is what's cool about, not many people probably saw this coming. I did make a tweet on it, but it was mostly missed. And this is kind of a conversation that we were talking about before the stream about, as engagement falls off and news stops affecting the price of the assets, it's typically a huge signal. And if you wanted to extrapolate on that maybe a little bit and kind of your take on that quickly.
Yeah, I'd love to. Yeah, we were talking about this before we actually hit the live button, and I want to give a shout out to Into the Cryptoverse, Ben Cowan. I'm subscribed to his charts and his dashboards, and a lot of the stuff he makes public and he shares it in his videos like multiple times a week. But the recent sentiment, it looks like not many people tuned into the recent dip. So he has this thing called social risk, which measures the amount of people tuning into crypto Twitter, crypto YouTube, pretty much crypto social media, to try to gauge some sort of sentiment and quantify it. And yeah, it looks like in the past, during downtrends, you have people tuning in to every crash, like, oh no, this is the bottom, we're back, until people just get chopped up so much where they just don't care anymore. As you were saying, they don't care. People aren't tuning in. Even look at our own community, how it's been fractionalized, and just a few streamers that are consistently making content nowadays. We mentioned like DCC, Your Friend Sami, and Coffee. Other than that, like I mean, there are others, but to the level that we're talking, like, tens of thousands of followers I'm talking about. But yeah, people seem to not care anymore. Sentiment seems to be down in the dumps. They're not tuning into the dips. But this is what we've seen before in previous bottoming zones: is we bottom on apathy. Is a quote that he likes to say. Ben is we don't bottom on people, everyone tuning in, right? We bottom on people being like, "Fuck this shit, dude."
When you stop, like, and a lot of the people out here that have built followings over like maybe 3 or 4 years, and we get to see, we get an extra edge that the general public doesn't get, because like, and we can see in our engagement, like, we can break it down in a detailed level and just see how much, like a tweet in a super bullish tweet 2 years ago would get thousands of likes and retweets, and like now you can post pretty much anything bullish or anything, and it won't really get any traction, generally speaking. And so it does give us edge, like I'm seeing like maybe like anywhere from like 20 to 30% the engagement that I would have got in the peak of the bull run, and my account's like doubled in following. So
Oh wow.
I mean, and I'm not even one of the most like the fastest growing account on Twitter now. I don't know if that's because I didn't sign up for pro or whatever, or professional or whatever, but
Oh, you don't have a
I mean,
check mark.
I did verify, but I didn't for the Twitter account anyways. I did verify, but I didn't do like the professional account. So I don't know if that plays into the way that it dishes out engagement or not. But so generally speaking, I'm just seeing a huge decrease in engagement, which to me is good, because the prices are starting to flatline and go sideways. And so like I'm actually getting excited.
Yeah, I mean, I think it's a combination. I don't think it's too much of the not being subscribed to Twitter Pro. It's more so just the sentiment we're talking about. That just reminds me though, people didn't used to tweet about Hex and Pulse like they do now. I feel like everything changed. They used to be like, people were more intellectual with their tweets in the community, and then at some point someone figured out that you could just tweet some random kind of dumb bullish like whatever, and it would get a ton, and then people kind of milked that for a bit, and at this point it doesn't work anymore. It's like you actually have to provide value in our communities on crypto Twitter or YouTube to get the views. It just, blind moon boy math doesn't work anymore, it seems. It actually takes legit insight or value. That's just what I've seen, which is
and
good.
There's so much new stuff to talk about that it's really not that much extra work to look and find new things to talk about. It's happening all over the place. Like builders are like yourself are out there creating and building new things to talk about, and it does give opportunity for those that are willing to take it. I did want to talk a little bit quickly about something that I thought was pretty cool, which was like in regards to the Pulse top, because we got to circle back here a little bit back to that part of the talk, but I calculated that if you sacrificed, so I'm going to pull up my screen, if you sacrificed Hex on July 17th, I think it was, of 2021,
13 cents?
You got roughly, I'm just going to say, like at the best rate you could have got, it would have been, I think it would have been like, you said it was 2.5x, roughly. It was like on day 2, and it was like 17.2 cent Hex.
Okay.
So if this is correct, and I actually only, when I did the math, I only accounted for a 2x. I didn't account for a 2.2 or for a 2.5x. But so if you did get on that daily candle, let's say you sacked for 17.2 cents, right in here, and let's say that's 34.4 cents. 34.4 cents of value in Pulse terms, right? So on that date, then you sold the top on the PLS chart. So I'm going to pull the PLS chart up here. You actually could have realized in Hex value the equivalent of selling $1.63 Hex, because you would have taken your 17.2 cent sack times 2, so 34.4 cents of value rewarded back in Pulse, and then that would have risen roughly from this level, which is only 2x level. It would have risen 475%. So you just basically to do the math, and it's like $1.60, $1.65, something like that. Wow. So it's crazy to think that people got $1.65, $1.60 Hex. They potentially, right? If they maximize the returns on this particular sacrifice at this particular time. And so I think just looking at this and just kind of seeing how crazy this launch really was for people, I've heard stories of guys that were LP providing in these first few days here, and they were bringing in like $20,000 of ink a day, $30,000 of ink a day, $50,000 of ink per day, as the ink chart's running up to $80 a coin. And so then when you ask, like, people, like regular folks think like the PulseChain launch was a dud. It really wasn't a dud for the believers that sacrificed a bunch of hex early and then dumped their ink reward. There was levels to that game, and you had to take action. You couldn't just sit still. Like, I remember watching people talk about, I'm just going to sit on my hands and wait for the 10x or the 20x or wait 2 years or whatever it was going to be. But this is kind of selling the whole point of why analysis is important and why it's valuable to be in the game. Why I even have axisALiVE.com in the first place is to try to capture these opportunities where you could have potentially sold $1.63 hex and been farming ink, getting, if you're a whale, $20,000 or $50,000 of ink a day, and then you could have just been like dumping with everybody else instead of holding it down to $1.14, right? So just the opportunity here was tremendous, and it's really just amazing, really, and I think a lot of people miss it.
Yo, absolutely. That's an interesting way to frame it, is to frame it based on the ideal rotations at any given moment in time. So yeah, and you could do the same with the PulseX chart and look at, that 33 cent or 36 cent top, right? So you could do the same sort of math. And if you do that 2.5x instead of 2x, then you actually realize higher hex value right there. So
isn't it also funny, to that point, to Gerardo's point about, sacrificing? So this would have been like a 2.5x up in here.
Yeah.
So this is roughly, you guys, 35 cents. Is it not funny that this value here, with just a 2x, was roughly 35 cents of value sacrifice, and this here, but then you double it, so it would have been what, 70 or more if it was 2.5x. But just the fact that the baseline was 35. It's crazy, like how the math works out on that, and how important the sacrifice phases were in developing this price chart.
Yeah, you could have realized about $1 or $2 per hex. That's wild to think about when you frame it that way.
Yeah, so if people are wondering, like, well, where can hex go this cycle?
Yeah,
it can. I think we've already seen it. People have sold it for $1.50, $2. Like that's like where it can go simply, right? And beyond that would be, really in deep adoption, or like an event where like people need PulseChain, right? They need it because gas fees do get out of control again on Ethereum, and maybe because the volumes on PulseChain, that's just where people end up, right? So I think a lot of the need is going to come later, and that's going to be really one of the drivers of adoption, what can get these prices much higher. Now, we've seen with Hex on its own on PulseChain perform tremendously well. I think it ran up to like 2.5 cents back here, right? And so like it's a Pulse Hex is already leading the way in terms of value on PulseChain and in size and volume, and so this is definitely where you want to be. Now, I'm not trying to take away from eHex at all, because I think that there's just as equal opportunity over there, and that's where I put a lot of my bet personally, is on eHex, especially in the event that you get that gas reduction eventually throughout this bull run. So, splitting the bag up between, some of the top RH tokens is probably the safest play.
It's an interesting point that I don't think I've never heard anyone bring that up, is pricing in Ethereum scalability for eHex price, because there may come a day where gas isn't ridiculous to unstake Hex. I mean, is that a potential future?
Yeah. So the rumor on the street, and this is something I got from DCC, was that the ETH devs are talking about an 8x reduction, which would mean whatever you're used to paying on gas fees, reduce it to 12.5% of what it is. So if it's $1,000 stake to end for a 3-year stake, let's say, now all of a sudden you're only paying $125. And
wonderful,
with any luck in the bull run, that's going to be a very big swing in gas reduction, and then utility added at the same time. So it's going to really swing the eHex chart. And since I got you here today, I'd be happy to show you some stuff that I haven't shown publicly. It's like usually just chart sets that I give to the members on my group, but I'd love to share with you just some analysis of, and for the group here watching us, about some of the analysis I did on different FUD and forks of the past. So let's go check this out.
Okay.
Let's see here. So this is part of my chart sets that I do. This was the quarterly report. I'm going to go to what we care about the most. Now, you've seen with Sami, he talked a lot about the XRP thing that was going on, right? How there was a lawsuit, and this was when the lawsuit occurred, was on this red candle, and then the following week, December 28th, 2020, XRP gets delisted from Coinbase. So this whole move equated to a 70% drop. And then he spoke to how after that SEC lawsuit, Ripple said they're going to fight back. And then even though it got delisted, XRP did do a 10x. So if you mark this out, it did a 10x in 106 days.
Interesting.
So then there's further analysis here, but that's for if you're watching for where to take profit. And so then I also went in and I looked at, what did Hex do the last time there was some FUD, some major FUD in a similar situation. So I'm sure we can both agree that, with the stock split, the dilution event that occurred where all this value that was in Hex got diluted into PulseX, PHEX, Inc., thousands of sacrifice phases, right? So it was way more than just a 30% increase in supply. The Hex supply doubled.
Yep.
And then you had all that other dilution on top of it. And that's why you get this massive rundown here. Is because this is trying to take value from, actually, I would say it goes as far back as here, right? This is just extraction of value for our, it looks at like extraction from the market on one hand, and on the other hand, it looks like preserving value to put into those other things. So what I think is happening is that the market is just really mispricing the value of Hex, right? Fundamentally, I think the market's kind of lost its way on the whole staking mechanism, because that's still going to pay you out tremendously. And now I think we're going to start seeing the first phases of whales starting to really accumulate hundreds of millions. There was a whale that came in a couple of days ago on PHEX, for example, and he came down here and he bought 100 million in here's a 1 hour candle. It comes in and buys 100 million, just like 100K, 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 60K, buys 100 million Hex off market. Now, there's not too many guys that can come in and do that. Right. And expect the chart to just for more hundreds of millions to come in to keep the price chart suppressed at half a penny, because it's just there's not enough stellar ammunition out there. We're only really looking at 16 billion-ish user supply liquid.
Really?
And so so you could do this a maximum of 160 times if all of it if it all got dumped, right? And so I think there's just not enough supply out there, based on some of the analysis that we've done with Hexfire.io and Crispy Man. And so, my point is that they're going to set the floor, right? They're going to set the floor. Now you're getting a triple bottom on PHEX. This is looking super good right now. You get above this level here at 009, and I think Penny's going to be in. I think Penny's going to be in. And not that it can't get rejected here at this purple line and come back down and fight it down again on unforeseen circumstances, but just that as it sits right now, which is looking pretty good for a triple bottom. So what we did was we just showed how big payday led to an 86% discount. Now in modern times, you're looking at, what was this, 99%, 97.5% or 99%. So that's that dilution to doubling of the supply plus all the sacks, right? And so that all makes sense to me. But then it rallied, 978%, and what was it, 41 days after that, and then went on to breach new all-time highs and beyond. So the opportunity there to pump the price back up is better than ever, especially on the Ethereum side because of the low liquidity, right?
Right. What is there, $1 million in the bid side or something on the USDT?
So if we look at this awesome new website that just got updated, we can look at the liquidity here. This is Gerardo's newly updated, super fast. Look into Hex.com site. Shout out to Wave3 TV for I know he'd appreciate the.
Where did he go, dude? Do you know where he is?
He's so if this is going to be a gem. This is going to be a gem for all the guys sitting in the chat. So Wave3 TV, he's retired from crypto for now, and that's all I can really say. He'll be back, maybe never again to be seen. I don't know. We'll
Okay.
come back and look at the ETH chart in 2 years, is what he told me.
It sailed off into the sunset. We never got the golden chart.
We never got the golden chart, so but no fault on him. He gave us the greatest gift into the Hex universe. So.
Epic, dude.
But so what are we seeing like in you? Let's see, what do we got? It's 50-50 bid to ask. So the market's pretty neutral right now. And this is based on all the liquidity, correct? Minus, of course, maybe PulseX V2, which is still probably getting implemented.
Right. There are a few pools that we still need to add, but overall, this is a pretty good chunk of it all. I still want to add like Hex Die, I believe, has like $1 million of liquidity on V1 PulseX, and then PulseX V2, has like has a couple, like 2 or 3 pools there that I'd like to add. But let's see, on the Ethereum side, what are we looking at? Let's see. Ethereum liquidity, what, 2 million, 2.3, like 2.4 million on the bid side. Ish, or no, total. So like 1 million on the bid side.
Yeah, there's not much.
There's not much on Ethereum, dude. I think at the top, the 50-cent top of Hex, I think there was like 50 million bid side liquidity.
Yeah, so this is going to be crazy when you look at this. So it's actually kind of crazy. We saw Hex hit same levels as we did last May, so a year ago, roughly, and then that marked that top. So the peak here is 31 million, based on probably like really high prices and all-time high ETH and USDC coming into the pools, because it's kind of like a always dynamic moving target, right? As the price moves. But
you have some really cool charts. Sorry to interrupt. You have some really cool charts that show like the USDC amount in liquidity and like the ETH amount and the Hex amount, like a liquidity time series. You have that, which I would love that for looking at Hex. But is that for like your private groups? Do you update those, or
which one are you talking about specifically?
So yeah, you plot 3 different curves, like Hex, USDC, ETH.
Oh, okay, I know what you're
and it's about. Like how much USDC there is in the liquidity pools, how much Hex, and how much ETH there are.
So there's a couple sites that we can tap on to get that. I'm pretty sure Hexfire does it. So if you look here like this, he'll do like this is the zoomed in one. There's a better one that shows the full timeline. Another guy, Gifford, created one. Let's see if I can find that quick. I forget the name of his site, but let's see here. Hex data. Yeah. T-share data. So tsharedata.com. He's got, this is by Giffordware, and he's got each of the. Yeah. I don't know how he's getting the data, but yeah, definitely. I would see, this is something I would love to see, all in one interface. So I know like there's competing. You got Look Into Hex, you got Hex Scout coming, you got this website from Gifford, and where's the because it's all
I would love to see collaboration across all of these, like
because like ultimately what we want is the best app that can give us everything. And so here's the USDC liquidity. It's just been flat, right?
Oh, okay. Interesting.
And then here's the Hex liquidity. So it's basically stable up here around 200 mil. And that's something that if you guys have been listening to me for a while, 200 mil is like the level that whales watch.
Really?
So, yeah. It doesn't usually go too far over 225 before someone absorbs, 25 million, or the market absorbs 25 million. And this was on the run up this year. Somebody kept extracting the Hex out of the pools and kept it around that like sub 50 million. When you're in a bull trend, sub 50 million Hex in the pools, because that's what kind of a sweet spot where you can keep the price chart moving.
This is a cool chart. It's really cool to see that, like you said, we haven't gone above 200 million ask side Hex liquidity since like May of 2021. That's wild, actually, to see that we can have the price chart do what it did, but at the same time, it's just based off the fluctuation of these ratios, and we never have seen more than 200 mil Hex at a time since last May, at least.
And I think like the takeaway here is that like this is the power that we get with on-chain traded coins like Hex that no other crypto gets. Like you can get more information from reading these charts than you can from reading the price chart sometimes. I know, and especially if you start cross-referencing, and this is something that Sloth and I talk about in our LP courses. Like this is something that if you start creating spreadsheets where you're tracking wallets, like you can really create an inventory of these. Here's some whale sellers, here's some whale buyers. Who's got more power? Where are we at in the trend? where's the significant lines of support and resistance, and you could start to gravitate your analysis more toward what's going to happen, and you can kind of see it coming. So yeah, shout out to Gifford for creating this. Look at how the Ethereum liquidity has just been gotten drained out since the fork. So this made me sick to my stomach, is that there was 3,200 ETH in here in March. I'm sorry, March 20th, and now there's 69. Where'd the 3,000 ETH go?
Dang, are you sure though? You're right. A bid size.
Yeah, dude. This is why I was flabbergasted when I saw the chart break down to like 3 to 4, between 3 and 4 cents.
I don't think he's counting Uniswap V2, because my site shows 117 ETH on that pool, Hex ETH on Uni V2.
Okay, so it's very possible that he's only pulling data from Uni V3.
But still, that's it's nasty.
Hey, this is where you can come in and make it even better.
Yeah. These are some cool charts, though. I don't have these.
I put it in the chat here.
Your API endpoints.
So Gifford, help a brother out. Back to the wrap up. So this was Bitcoin Cash, and when it forked from Bitcoin. Now this is like the analysis that I haven't really shown anybody, but it kind of reinforces like the power of what EHEX could potentially do this cycle if it plays out similarly to past forks, where, first of all, let me just state this on the surface, like Hex is Hex. It's a store of value. It was always marketed as a store of value. The T-share is always going up. And I personally believe, and I kind of know, that Hex on Ethereum is a store of value. It's not going to change. It's going to be there forever. And it'll always have a ratio to P-Hex. But this chart here is going to try to reinforce why you may not want to exit fully out of one side or the other, and that by playing this ratio game between your two hex bags, you may actually be able to compound your returns, at least on your liquid bag. Now you should be, in my opinion, of course, having some sort of a ladder set, because those are the guys that have won the hardest for the last 3 years. Is the guys that had these long staking ladders. They're still winning, and now everything got doubled.
Yeah.
So the takeaway here is that the fork for Bitcoin Cash happened on August 1st, 2017, and the price dropped 32% in 5 days. So the green line is Bitcoin Cash, and the orange line is Bitcoin. And so these two charts that are kind of like intertwined, they're measuring their relative performance. And so in relative performance, Bitcoin Cash overperformed Bitcoin on 3 different occasions. Now, the first time was shortly after the fork, and the second time, look at this long extended period of underperformance of Bitcoin, but yet here in middle of November, it just shot up. And so here is where you take your ratio trade, is when you see those big moves. And this is fucking huge alpha for anybody that cares to take advantage of this. And this wasn't the last time it happened. There was a third and final opportunity here after Bitcoin topped at 20K.
Yep.
Within 2 weeks, you had a second chance with Bitcoin Cash. And dude, these long extended underperformances are not to be looked at as a negative. Those are huge positive opportunities to absorb and accumulate the cheaper thing for longer at a better price. And so you can actually realize better returns. Of course, your fundamental thesis has to be that you think that EHEX is going to survive.
Right. No, this is a cool chart. So you're effectively saying EHEX is analogous to Bitcoin here, and PX is analogous to BCH, and you see these kind of rotations where you could arbitrage between the two.
Exactly.
Okay.
And so it goes further, right? So it's not just good enough to have one example. It's better if you have multiple examples. So I looked at Ethereum Classic, right? So in the Ethereum Classic case, ETH Classic, so what happened was, for those that don't know, in July of 2016, the original Ethereum Classic, which was Ethereum at the time, got hacked, and there was a bunch of ETH that got taken away. And so they decided to roll it back and fork the network into 2 different networks.
That was the DAO hack, right?
The DAO hack, yep. And so what ended up happening was, in terms of price, after that fork, ETH Classic actually shot up and overperformed Ethereum. So then, because I'm sure back then the narrative was probably something like, ETH Classic is the real Ethereum, and we're libertarian, and we believe in not reversing the code and not doing this or not doing that. And so there was Yeah, it's proof of work forever. Yeah, all sorts of stuff that was just people beating their own drum.
It
But
was
the
the
reality
original
is,
Ethereum proof of work. Remember that whole thing?
yes, I can't. Yeah, I forgot that just happened too last
Yeah,
year,
me
right?
too.
So,
Yeah. Anyways, go ahead.
dude, but that's a whole the Nvidia conversation. That's a whole other conversation we could have. So, had plenty
Yeah.
of content. But so yeah, anyway, so the long story short, you guys can see that this green line overperforms Ethereum for the whole cycle. ETH Classic overperforms Ethereum for the whole cycle. This is the 2016 and 17 cycle. In terms of relative performance from the fork date, ETH Classic did a 16,000% in 386 days, and it was
Really?
only in the following 30 days that Ethereum actually finally shot its head up and
Mhm.
overperformed for the 20,500% return over 404 days.
Wow.
Yeah.
Look at that.
So
Is
another
it crazy
example.
to say that that green chart, that's ETC, that looks strikingly similar to PLS. That initial freaking huge run up, little double top, and then just doom down to like that previous bottom ish.
That's a
I'd
great.
love to
That's great.
overlay
I didn't see that before, but yeah, that does look exactly like. So you guys, this down here, let's
that.
just look at PLS quick.
How far did ETC dip? Do you know?
86%, I think.
86.
They went up minus 80% is what I got here.
And what about PLS? I think we're down like 85 from the top. Let me do some math real quick.
It's looking like 86.59%.
Nice, yeah. Yeah, and even overlaying the ETH launch, like because you can overlay hard forks, you can overlay launches, and effectively the same thing for like ETC and ETH. But yeah, when ETH launched, again, dude, that PLS versus ETH, shout out TradingView for taking away our data, but that chart looks insane, man. Like they both did about an 86% dip in the first, I think 80 days or something. And then from there on, it was bonkers. Then again, it's a different macro environment too, though. I don't know how much you pay attention to that. I feel like you of all the streamers would really pay attention to that stuff.
Yeah,
But like,
super interesting right now with
good.
what's going on with the dollar and bond yields and stuff for sure.
Right, like we have the. I mean, do you think we're at our terminal rate? I know I'm kind of pivoting all over the place, but do you think 5.5%, or do you think Powell's going to pump it up another quarter percent? I think he said he was going to.
So in my opinion, I've basically been basing any kind of opinion that I have on rates based on how long is it going to stay flat. So like,
yeah,
all I can do is go back and look at like, I'll pull it up now. I can only go back and look at like what's happened before when the Fed goes flat on rates, and and so currently it looks like they don't have to stop raising, but they're just going to raise at a decreasing rate.
Sure.
Right, and so that they can do that as long as they want, and typically what happens is they break something, right?
Yeah, yeah.
And the question is, well, when are they going to break it, and how are they going to break it, or what are they going to break? And that's not for me to decide. But I'm looking at this like I'm going to do like a weekly. And so you guys, for those that want to know what I'm pulling up here, the orange line is Fed funds, which means that's the cost to borrow money.
Yeah.
And the white line is the dollar price. And so what happens is, you can see here that typically when rates rise, the dollar rises. When rates fall, the dollar falls. And usually rates like have led the charge, right? So right here you can see, well, here the dollar, here rates stayed low and the dollar rose, so that actually invalidates that. But but so basically what I'm looking at is 2 years or less is like that's how long they want to wait until they lower rates, or so I just expect it to kind of stay flat and maybe slightly rise, but like they're gonna have to be very careful. And so I'm looking for that flatness like that we got here.
Right.
I'm looking for these types of action on rates. They could do this where they lower rates, but they keep them pretty much flat for a while, and they just try to play this game with the economy. Like their goal is to get more unemployment, destroy demand through raising rates. The housing market's kind of effed right now because nobody wants to sell because they don't want to have to buy something at a higher interest rate,
right?
And that keeps no inventory on the market. So then that means that prices of housing stays elevated.
Yeah.
And so it's just everything's kind of at a gridlock right now, and what's going to snap first? That's a big question for a lot of people. And so because, bond yields have been increasing, that means that the government's overhead is increasing. And that's going to become tremendous, to so much so that, how is the government going to pay for all that unless they print more money out of thin air? And so I think I don't know what happens first or how long. I would say that just based on my gut feeling that rates have less than 18 months to basically start to decrease, and that could mean like extended periods of sideways, slight increase, and then a new low, and then, something happens, right? Some triggering event.
Right.
What are you thinking?
Man, that was a lot to digest. Man, it's tricky, right? Because there's a lot of moving parts. But last time we stayed flat on interest rates at the peak right there, I think it was 2019. That's when Bitcoin did its run. But it may be that this time the market is one step ahead, and instead of topping out at some, what is it, like when we start cutting, perhaps we top out, like perhaps we already topped out with that recent summer high, and we bottom out when we start cutting. So like maybe the market got smarter, and whenever we start cutting rates again, like say, I mean, I just go by what the CME group, kind of what the markets think. I think right now they're expecting rates to start cutting in June, I believe. Last I checked, I could check right now. CMEgroup.com. What do they expect? I mean, they expect it to stay flat at right now. They think we're at the terminal rate.
Yeah. So just to quickly answer that, I do believe we're at a point now where rates are going to stay relatively flat.
Relatively up. Yep.
Yeah. So like you might see it stay flat, and then you have like an up month, and then it goes back down right to where it stayed flat at, something like that. They just kind of test. They like stick the tip in a little bit and find out. And well, who's going to sit around and wait and find out? I don't know, but
and I mean
the
one thing that they might break, as you were hinting at, is potentially that unemployment rate, because that's been low for a while now. It's been at historical bottom, like that 3 to 4% range, and just like flat. So if anything's going to break, it might be that. Another interesting chart to look at is net liquidity, like central bank balance sheets. If you overlay that with crypto, it's kind of scary how accurately it's just it tracks it. And this goes to Ben Cowan's thesis that crypto prices are largely influenced by excess liquidity in the markets, which is why we're talking
agree.
about all this stuff. So
it's hard to admit, but like we're so dependent. Oh, I shouldn't say we are, but cryptocurrency is the most liquid asset. And so when US dollar liquidity dries up, you can't live in your crypto, you can't eat your crypto.
Right.
So when excess liquidity dries up, obviously crypto is going to be the place where people go to get money to pay for things that they actually need to survive.
And like last cycle, I think first you saw liquidity start pumping above previous highs, not liquidity. Then you saw Total 3, the altcoin market, get above its 20-week moving average. And then you saw Bitcoin get above its 20-week moving average. So the more illiquid ones sometimes seem to move first, which is why some people might notice that, for example, Pulse or Hex do things before ETH does, right? Like, I mean, what do you think? Do you consider Pulse an altcoin and Hex? They're altcoins, right? In the technical definition, in the sense.
Yeah, I mean, if you just want to say that anything that's not Bitcoin is an altcoin, right. Yeah, I think that applies. And I would say that based on price performance right now, they've proven themselves to be altcoins.
Yeah.
It's just what it is,
It is what it is.
One more cycle and you could almost put Hex in the blue chip category, but it has to do that first, and you need that adoption. You need one more wave of adoption, and then I think it can be more blue chip. But right now,
and I think it's fair for both things to be true, to believe that Hex and PulseChain are superior than other cryptocurrencies, but at the same time behave like altcoins, even 100%. Though they have the potential of being blue chips. Like, I don't think those are contradictions. I just think it's more realistic. I mean, just look at the liquidity, right?
I found a cool chart I want to show you, just see what you say about it. It's so basically you take BTC, USD, and then you divide it by Fed funds. So I'm like, well, what is this really telling you? And what it's telling me is, let me minimize this stuff.
BTC over Fed funds.
So it's like, So it's like, well, so when the cost, so basically, it's basically reflecting the price of Bitcoin based on the cost to borrow.
Uh-huh.
That's kind of what it's telling you. So then let me put up, and then I'll pull up Fed funds over top of it.
Interesting.
So you can see the relationship. It's also good to compare it to Bitcoin on its own, just the price.
Yeah. Interesting.
So got to get it on its
Right.
own thing.
If something's going, hold up. Yeah, if something's going up while something else is going down, the ratio should, in theory, stay kind of flat. Is what you're getting at here. So then, if you see these sort of spikes and these lows and these highs, then it might say something.
Yeah, so like I just look at how I'll take down Fed funds for a second. So just look at how the difference is as rates are increasing here.
Bitcoin increased faster. That's
Correct.
why it goes up.
But then but you get all this sideways action as it starts to pick up.
Oh, so you only get that spike on the white chart when Bitcoin goes parabolic, pretty much.
Yep.
Huh. That's a cool chart.
And then this was crazy here. When you saw rates go to zero overnight, it totally puts us into a new epoch. And then look at how this tracks exactly. Because rates are at zero.
Yeah.
Yeah. And then as they raised rates here, like we totally came off, and so what you're looking for these moments of correlation here in the beginning, they're correlated. Here they're correlated, but when you start to see divergence of these two lines, that's when money's being money is being repriced. And so what is Bitcoin? How is Bitcoin reflecting that? Increased prices. So just kind of like a cool little experiment I did, but yeah.
No, that's cool. It's fun to get on TradingView or other sites and just start dividing different assets by certain rates, but just see if you can find a correlation, or like that makes me want to divide Bitcoin by liquidity. Just kind of see, because if they track each other that well, in theory it should be flat, similar to this concept. So if you
pull down rates, let's see. Let me get it on its own. Oh no, it already is. Okay, we're good.
Interesting.
So yeah, so when let's see. Let me pull up liquidity once.
That's Bitcoin over liquidity, really?
I'm sorry. This is balance sheet. That's what you wanted, right?
Yeah.
Okay. So let me give it a different color. Liquidity will be in green.
Okay.
And then let me get this on a log.
Always bullish listening to you too. Nice.
All right, so let me just try to break this down for a second. So where they start to decouple was when liquidity comes down. So you see that the gold line, which is hold on, because the white line is it's divided by the balance sheet. That makes sense then, because it would be it's showing the inflated price, right?
Right?
And then then it tracks back when there's this huge injection of liquidity.
Yeah.
Then they recorrelate because the new inflation is pricing in higher prices on Bitcoin more directly, I think. Yeah, it's definitely cool. So here we are live testing out theories and
just brainstorm. It's interesting how white is beneath yellow right now.
Yeah, and that makes total sense, right? Because so that's kind of like negative externality dragging Bitcoin down, right? Because it's like there's less liquidity, and that's being reflected in the white line. But when there's does that mean that during this whole part of the cycle here, the excess liquidity was artificially keeping Bitcoin higher because it was pulling it up like this with the excess liquidity? And then it wasn't until this that they recorrelated. And then when we started to get liquidity siphoned out of the market, now that's acting as pressure pulling crypto down. We haven't seen that kind of pressure. I was just looking back through the chart. I see it here a little bit and here a little bit. But that was because Bitcoin just overperformed so hard, not because there was less liquidity. So, yeah, it's cool, man. It's cool. I think for me, it just says that it's proving that crypto thrives the hardest when there's excess liquidity in the market.
Pretty
much. You can pretty much just walk away from crypto, and that's kind of what the sentiment data is telling you. Is like people are walking away. because risk is off and like the stock market is in a shaky period.
I mean, the SPX is like topping out. It's been running. Like crypto's been getting thrashed, and SPX just keeps going.
1 second, I'm just gonna address
But
this
I think we may have
question.
talked about it the other day.
Somebody asked like if you want to do consults or anything and learn more about this stuff. Yeah, I do have a course coming on market cycle theory with Crispy Man, but that's the link to the consult page if you're interested. But yeah.
So if I pay you money on that, you tell me when to take profits, right?
I mean, I might be able to help you out. I don't know that much more than you do, but you know, generally speaking, if you're new to the space and you know you want to know some of the secret stuff that we know, I mean, when you look at the data and you look at the charts every day for 4.5 years, it's like you do kind of find edge that other people don't have. Not that you can't learn it, because it is totally learnable. It's not rocket science, but if you want to get put on the fast path, that's why it's signed.
Hey, you've showed me certain charts that I've seen before, but hadn't thought that in depth before. Like the that whole ask side 200 million hex liquidity. I didn't know that, so I learned something new every day watching your stuff, man. Yeah.
Hey, man, dude. Honestly, I appreciate that so much. Yeah, the support is everything. So like I know that there's like a really diehard group of people that really respects and you know loves the analysis, and you know I do it because I'm kind of a nerd and I just like doing it, and you know I keep getting better every day too. So you know if I can share my knowledge with you guys, and you learn something, and then it just makes the market smarter. That's better for everyone. Now I will say I've dialed back a lot of the like public tweets on charts and stuff because people were just abusing that information publicly, like for free. Yeah. They were just using it against the market. So it's like at some point you got to dial it back and kind of create more of an exclusive set of people. So, but it's fair.
It's fair, especially because we're like in a lower liquidity community, I guess, compared to like a BTC or an ETH. So if you drop some alpha, well then, yeah, just a whale or two could definitely use that info and move the price chart, front run you and your community. So might as well keep it up until we get to liquidity with the likes of Bitcoin and ETH. It's probably best to keep that kind of stuff to yourself so people don't front run you.
Mm-hmm.
Yeah.
How much time we got? We've been going for 55 minutes. I usually cut it off at an hour and a half, but I'm good for at least till then.
Sure, I'm cool. This is your show, man.
Cool. A big shout out to Paul over there at, you know, he's been working behind the scenes on Mintra for a while. So, you know, you're awesome, man. And we had a discussion, just him and I one time, and he couldn't have enough nice things to say about you, Gerardo. So that's awesome. And this is from a guy that not only I, but other people really respect. That he's a wizard behind the keyboard. And so just we appreciate you, man.
Yo, Paul's the best. Paul's the best. CTO of Mintra. Couldn't have done it without him, dude. It's, he's single-handedly built probably half of the app, if not more.
I'm excited to see that thing get launched. Any idea on a date?
Have you played on testnet yet? I'll answer your question with a question.
I have not played it on testnet yet.
Surely you're ready for mainnet. Surely. You tested your NFT strategy.
Well, the bulk of my NFTs consist of HSIs, and that's it.
Nice, man. Well, look, those are one of the ones that I love the most. If you've heard me talk about DeFi NFTs, other people call them other things, financial NFTs, but they're backed by real liquidity. I love that kind of stuff, where it's backed by actual tokens, underlying ownership of tokens, like HSIs and WATSAs, and I mean, even Uniswap V3 LP NFTs. You don't see much volume on those, but I like the concept of when you have a unique position in a protocol. Why not encapsulate it in NFT and make that position tradable? Like, why would you?
Yeah, I have a hard time wanting to start non-HSI stakes just because they give you so much more flexibility in the future. Like, imagine the price of Hex goes a lot higher, and let's pick an arbitrary number. Let's just say it's 50 cents. All right, and you have an HSI, and you want to get money in the real world. Well, you could technically collateralize that, and if it was a big enough stake, you know, you could collateralize it at, you know, like 90%. So what you'd get, or you'd collateralize it at 10% of whatever you need. So like if you had $1 million stake, you could get $100,000 on that $1 million, and then, you know, be relatively safe in the event of the price falling even 90%, and you could still get 100,000 in real world money and never incur a tax event or force sell pressure on the chart. So there's a lot of opportunity there where you could actually transfer ownership to a neutral wallet that your bank held, and then actually get real world money and not actually have to sell your bag. So there's a lot of opportunity there that I think people are missing, potentially by just having a regular stake.
Yeah, man. Shout out to Alex for building that whole ecosystem out. But yeah, man,
Big time.
I'm a fan. I am a fan. And just to answer your question, I guess, about mainnet, there isn't a specific date, but I'll give an advance notice, probably a week notice.
Okay.
Yeah, that's probably it.
Soon? 2 more weeks?
When soon? When moon? When Lambo?
When soon? Monsoon, when moon?
When moon? When soon? It is what it is, though. Like,
there's still a lot of the biggest protocols that have yet to launch. So it's not like it's just you. Like, it's everybody that's big. You know, they're waiting for the right time. I think it'll come when the market's ready, right? The market has mispriced so much. Like, why would you want to put your project in the line of fire? You know, it's smart.
I mean, there's that. I think a lot of people overestimated how much Richard was timing the launch, and I think they're overestimating how much I'm timing the launch. Oh, what's up, Maddie? Good to see you here, man. But it's really just a matter of like making sure everything's good, everything's tested, audited, secure, performant, like snappy, quick. We have failover systems. So if something, one process goes down, we're able to see the logs, like, okay, why is this not working? And like we have a whole dashboard to view event logs, like internally. Just it's like a lot of stuff you don't even see that's being worked on, like terms of service, privacy policy, user agreement. There's a ton of stuff to make sure something is like proper, legit, and ready to go. Like even answering the questions of what does it mean to own a NFT that was duplicated from Ethereum to PulseChain? Like, do you have to look at the terms of the NFT? Some people say like, some projects say it's a derivative, kind of commercialization derivative work, and it's allowed. So those fall under the terms of the collection itself. But if not, and it's something along the lines of, well, only the Ethereum NFT is real. Anything else we won't recognize. And you see that in some terms of certain collections. Well, then in that case, does your PulseChain NFT duplicate become a meme? Like, what is it at that point? Like, you own it, you hold it, but they're not recognizing it as real. But that doesn't stop people from just like pumping and dumping stuff. It's a lot of questions, man. And I hope it brings some sort of clarity to the PulseChain NFT space as a whole, education and experts. And I want to bring that to the community because everyone's just giving just like these bro answers.
Yeah, no, it's like a really important philosophical question and principle of like, what is value and where is value rooted in? And like we saw that not just here with the NFT thing that's going on, but also with like the Wrap BTC farms with that the admins behind PulseChain launched with RH, and it's like, well, wait, what? There's a forked Bitcoin that's a fork of a wrapped coin. It's like, what the? And then now that it trades and it has actual value and it's a price chart, it's like, technically you can't deny that thing does have value, right? It's just a matter of it really opened my eyes. It blew it wide open. I think the question of what is value and how can you derive value in a system. And so I don't think that these forked NFTs on that are going to be on Mintra, it's not that, like, who is to say that they're fake or real? If it has value, it has value. The market is ultimately going to decide in a truly free market, and this is all on chain.
Yeah. If there's a buyer, well, they're setting the value. It's really weird. Wrapped Bitcoin was a great example because, I mean, wrapped Bitcoin in of itself is, what is it like? Who's it held by? I always forget. Is it BitGo? There's a company. There's a central party where you basically send them Bitcoin and they send you wrapped BTC. Is that how it works? I feel terrible.
I'm finding out right now.
Exact mechanics, but it's actually backed by real Bitcoin that someone's holding. Now it got forked, and what is a forked over wrapped Bitcoin? It's not backed by Bitcoin 1-to-1 anymore, but it has a price chart, like you said. Same with PDAI. That's another one that kind of broke people's that concept of, okay, well, it's not backed, but it has a price chart. So it's valued at a percentage of the real thing. So you created value out of thin air effectively based on what people are choosing to put backing into.
I'm reading here that it's saying that there's a wrapped BTC DAO that decides on major upgrades, and I don't know
Okay.
who holds it, but
Okay.
the point is that we're creating value
Right.
by creating parallel systems that they decrease cost to transact, and so that on its own right is a utility that you're adding, right? So the copying is like the copying of the system state of Ethereum, and the duplication of everything wasn't the value. It's like the effect of that cause, right? Which is that you're cheapening the cost to transact on two chains. It's like building more roads laterally, and I think Richard's talked about that a ton. And
Oh yeah. Mm-hmm.
and you know, tokenomics are a very real thing that are considered when in the creation of a token. And so in the case of like a NFT, which there's only one of them, or now there's only two, one on each chain, that's still a very limited and scarce resource for whatever reason. And that can have value just because of the tokenomics of it. And the wrap BTC is the same way. If there's only 100,000 of them, or however many there are, it's a scarce resource. If the price chart dips far enough, a whale can absorb a lot of the supply, and then they can make a market at a higher price. That's just how markets will function, right?
Hmm. Yeah, is wrapped BTC mintable on PulseChain? I'm not sure. I haven't looked at their code, like who's allowed to mint or if it broke after the fork. But that's an interesting point, especially if you're able to mint wrap BTC on Ethereum and not on PulseChain, meaning there's less on that side.
Right.
I
So
don't know.
my understanding is that you can't mint new BTC by on wrapped BTC on B. So that's a fixed supply cap.
Oh, it is.
And so that actually makes it more rare, because then you can't. It's like a weird like mutated asset that you can't have. It's a fixed supply,
Mutated
and
asset. I like
it'll
that.
be it'll be like absorbed by whales at the low prices, and then they can create a market. And like that's kind of what we always hope for Hex, right? Was that we'll have these huge market cycles where smart money, smart whales, the top 3,000 wallets that hold 89% of the supply staked, right? These top wallets. Now, that's probably less than 2,500 people, realistically. Could be even less than that.
Yeah.
That have the power.
Mutant Asset Yacht Club. Someone
Oh
launched
no!
that.
What did I do? Oh no! CryptoSilas asked a good question.
Yeah.
She says, Gerardo, where is Hex adoption compared to ETH when ETH was 3.5 years old? If you want to pull
Let's
it
go
up.
to this handy dandy site. Have an adoption. You want to share your screen, or can I share my screen? You got it. If you go to look into Hex, you go to adoption right there.
Where are we at here?
Bottom left. And let's see. Not quite there. Not quite there. Well, the green one is Ethereum.
Yeah.
What was Ethereum at right now?
So
3.5.
what's that? 600 million wallets? Or no, 61 million wallets.
It's a lot of wallets.
And by the way, CryptoSilas, this here a huge injection of total Hex holders. Sorry to say, that was actually kind of like a fake pump. Like that was like some wallet address sent out 100 Hex to like thousands of wallets.
Yeah, it was that whole promo for Monarch wallet, I believe, where they're like, if you download this wallet, you'll get some free Hex. And I think it was like 100 Hex, which at the time was like a few bucks. I think that was the first layer 2 like mass usage of like the first big use of layer 2. I can't remember, but I think they paid a lot of money, like in the 6 figures, to airdrop to all of those people. So shout out founder of Monarch Wallet. I think he's a cool dude. I've heard him talk a few times.
I did not know that backstory. That's cool.
Yeah,
I always wanted you to
there's a lot of lore to Hex.
create a dude. No kidding. There is. That's gonna make for an epic story one day. Which is why when I watched the documentary, I'm like, this documentary is not even done yet. I'm like, we need more. We need 2 more years, bro.
Yeah. But yeah, that is kind of a fake pump, quote unquote. And you can see it because even though holders went up, stakers did not as much.
Yep.
So some of those people who got that airdrop staked or got into the ecosystem. Can you actually hover above that real quick? I haven't really.
Where at?
Down during that fake pump. If you go down there.
We had 23,000 holders.
Yeah. What are stakers there? Like 11,000.
11,000. So 50%.
Right. So holders pumped to what, and stakers pumped to what?
192,000 holders, and then
And we
2,000
got
more stakers came on.
like 2,000 or 3,000 more stakers. Cool. So
So
like,
that's actually that's right. That tells us that that pump brought on 2,000 or 3,000 potential new users.
that's cool. That's pretty cool. So yeah, with a 10x pump in holders due to the airdrop, you got just a little 30%
Increase in stakers.
not
cool.
bad. What is that, like
not
a
bad, not bad.
3% conversion rate?
And then if you think like as
Like
it went
sales.
on, that actually ended up going, even though the holders kind of stayed flat during this period, the stakers continued to rise. It went up another 4,000.
Mm-hmm.
And then going into big payday, even though the holders only went up 30,000, the stakers went up and basically tripled going into big payday. So it was actually an effective marketing campaign.
Good stuff. Yeah, it bothers me when people say like, oh, that was a ploy to just look at a holder's chart. It was a ploy to make it look like there was more demand. It's like, no, dude, it was literally a marketing campaign, an airdrop, historically documented. Like, do a little research before you FUD. Even smart people have given that FUD point. I think Eric Wall did it at one point. I was like, bro, really? Like that's.
I mean, before today, I always wanted you to create a holders line that excluded those wallets just to see it. But I mean, we can derive our own, ideas based on this. But yeah, just to have it would be cool.
Mm-hmm. Sure. Yeah, I'll put that on the roadmap for
that one, and then the combined, hex chart, right? So this one that Tantonomini or dip catcher he created. This was super cool to see. It was just
that is cool
to have this chart available on Look into Hex, obviously with all of the other utilities and add-ons with it as well would be cool.
Where should I put it, on the ROI tab? Or I've been thinking about where to put just like that.
So you definitely want to do this with it. When I don't know what your plans for the logarithmic regression going forward, but you definitely want to have either their own chart or combined chart where you get the combined on this chart as well, or its own. If you're going to keep this,
I'm gonna I got a new fit with the new bottoming data. And for those hating, like, it's just a mathematical model. I clearly said multiple times back in the day, like, this will probably break at some point. If we start forming like market structure, we'll refit, whatever. Yeah. But no, I have a new fit for it. That's more
accurate. It's cool
accurate
how it's respected the lower bounds here on each one of these taps. 1, 2, and then the third tap over here. It respected it, right? So it's significant. It does give you information.
Right.
But
I want to get your take on, if you go to the ROI tab, so there's Hex ROI, and then there's Hex shares. And a Hex share obviously is one staked Hex from the beginning, right? So now you have eHex and eHex share, you have PX and PX shares. So what I would love to see is not only an eHex plus PX chart, but a eHex share plus PX share chart, which would show the journey of holding one Hex, staking that Hex from the very beginning, getting your duplicate on PulseChain, and both are still staked and now earning different yield. That chart would one up pretty much anything I could think of for the combined prices that show like the value of holding a Hex from the beginning. It's all the yield you've gotten and the fork you got, everything. So
theoretically, that would actually double the white line. It would give you new highs, right?
But only after May 11th.
Right. But I mean, you could virtualize it, so to speak, as if you always knew there was I'd be a doubling of supply from the beginning. You could virtualize it because it's the same. Okay. It's effectively the same. You could just create the line. But yeah, no, the idea then would be to create, depending on how you want to do it, you could just have it branch off on that date of the fork.
I think so.
And create two lines.
Yeah.
So you want to do it. Okay. Yeah.
Yeah. So then you would have cool like your just liquid Hex, and then your staked eHex, and then you'd have your liquid PX plus, like, it gets crazy, the combinations you could do, but I think eHex share plus PX share, that encapsulates just all of the value of one Hex from the beginning. And what would that be right now? Like, that's actually a really good question. What would that be right now? Just if we can do some quick math.
Let's see. eHex is.
Yeah. Was EX 0.004? And then PX is probably like 0.008.
Yeah, close enough.
Okay, 0.008. So 1.2 cents combined. But EHEX, the share rate has 3x from the beginning, right? So you could say there's like 1.2 cents of value on that side. And then on the PulseChain side, man, oh, I see what you mean by virtualizing now. Because if you had had a long stake from the beginning, you technically have a long stake from the beginning now on PulseChain. That's
You
like
have like, yeah, isn't
virtualizing
that
back
cool?
to day one. That's so weird to think about, but yeah, you're
I
right.
know, dude. But that's why the people that are dumping one side for the other, they're totally missing
Yeah.
the opportunity in keeping like the stake alive on both chains. Because
So
if they both appreciate, then oh my gosh, like the amount
yeah,
of like gains.
you could 3x each side because that's how I did. Because like 30,000 hex per T share versus 10,000 at the beginning, just 3x each side, and so you have an effective value of E hex share plus PX share right now. Just off the top of my head, about 3 or 4 cents.
Mm-hmm.
3.6
And that
cents.
makes sense because that's where the highest, that's where the, let's see here, the all-time median price is 3.119 cents. So 3.2 is like the sweet spot. And so
Drop the mic.
even though the market is like totally mispricing just EHEX, the price of a liquid coin, it's
Yeah.
the data is saying that holding through all this and being staked actually kept you in the black on all this relative to the median price.
Mm-hmm.
You know, but here's the thing is like, you know, how many folks out there coming into Hex are ever going to know any of this? You know what I mean? Like it's such a deep system with
Deep.
so much lore and so much history, you know. But you know, because of the yield component being immutable, people may never know the full history, but they're gonna need the yield eventually. And I think that's kind of
Absolutely.
been my take for since 2021 when I started streaming about Hex, and so I'm excited
Mm-hmm.
to see where it goes.
It makes a huge difference. The yield component that's not shown on the price chart, and now with the fork, there like so there's more data that's not just clearly shown to the average noob that's just coming in like, oh, this hex chart is wrecked. Well, yeah, fair, but is it down 99% in value from like someone who staked their hex from the beginning, got big payday, got the p hex on PulseChain, it's getting yield on 2 chains now? Like, what's that dude's experience? It's not this chart.
And the Hedron and
And
all
the
the
Hedron,
airdrops. Yep.
the uni they got.
Yep. Tornado Cash. I mean, there was tons
Torn.
of airdrops. You know, there was, oh my gosh. So
Hey, Tornado Cash, what's that? I don't know. Oh man, I hope what's his name, Roman Semenov, developer. I hope he's out of jail, dude. Like that was awful. They really arrested Tornado Cash devs. And then recently you see, oh, Uniswap, they got off scotch-free recently, which is good for the industry. I don't know if you saw that, but like that recent statement was like, ETH is a commodity, BTC is a commodity, and Uniswap, you're not doing anything wrong. But you have Tornado Cash devs in jail. Like, come on, guys. I hope this sets a precedent to help them just have their freedom.
Yeah, I just don't know how it even got to that point where you started arresting devs. Like they must have been, you know, I'm speculating, but they must have been neutral on things and not willing to be super helpful to the federal government, right? If they were looking for some sort of funds that might have been pushed through the protocol, but not that they have the power anyway, right? Because it's all, you know, it's not in their control really to decide who uses and who doesn't use. That's not like the nature of the protocol they built. So they're totally unjustly held, in my opinion. But you know, I think you know, with any luck, they'll get out of the clutches of the gov.
Pray for Roman.
Yeah. You know, so I said earlier on the stream that I would talk a little bit about that. Somebody put in the comment section like KEK is better than Axis. So just, you know, a quick I've never shown this publicly yet, but I'm just going to show like a chart. So there's like this other guy named Hans who does TA in our community, and Hans and I have streamed together on multiple occasions. and he's like, I'm pretty sure he created the KEK token on PulseChain, and it's so there's like a little ongoing competition to see who's useless shitcoin, meme coin can do better, and so KEK here, it's looking pretty good off its lows in dollar terms. The KEK price is, let's see here, what's it up? Up 500%, and then in Pulse terms, it's up even better. I'm pretty sure. Let's see here.
Axis doing meme coin TA analysis. Is this a bottom signal?
Yep. And then KEK again, on its all time against PLS, it's done like 44,000%. So he made a tweet today. He was like so surprised by the performance of it. But then there's like this guy. He was in the chat earlier. He's like Almighty KEK or something like that. He and I like go back and forth on Twitter DMs sometimes, like, oh, the big battle, Axis coin versus KEK coin. And so I just thought I'd take the opportunity to show this asset that I made. It's just a useless shit coin. I used the GoPulse app to create it, right? But it's just like a fixed supply, scarce asset rewards token for members. So I'm able to like give value back to my members.
Nice.
By just like if you're going to participate and you're going to be there for the private streams and you're going to be talking in the boardroom, then I can give away this thing as some sort of value add, and any future expectations of like added utility and stuff is off the table. But so as far as you guys are concerned, this is a useless shitcoin. You should never buy it. But in terms of price performance, since the lows, it's up like 30 point. Let's see, I gotta do some math here. This is 3.5 billion%. So it is effectively one of the most best performing assets ever on PulseChain.
Amazing.
If you hit the log button, it doesn't even like make sense. It's like, how's that even possible?
I'm going to pull an Eric Wall on you and be like, how much volume was at the beginning, huh? How much liquidity was there at the beginning?
Yeah, there was so I actually was there at the beginning of it. I was witnessing the original launch of the LP pair, and there was 100,000 Axis in the pool at first.
Right.
And so ever since the beginning, now there's only 19 left, and it's backed by about $6,000. So
wow.
Yeah, not that much. There's not that much backing it right now, guys. But it's that means that it's easy to slip up and down. But it's got a tremendous price chart. It's up to 8.47 million PLS per Axis. So it's been just been an incredible ride for anybody that got in. I know I found a guy yesterday that bought at $4 and sold 2.2 coins yesterday for like $700 or something. So
nice.
Good for him. Good for him. There's not that many addresses that hold it, so do not buy this token.
It's fun, dude. Like giving free value to your community in the form of NFTs or ERC20s or whatever. Just it's a fun little thing. I like how you're transparent about it, and you're not like, oh, this is a serious thing. This is gonna go to the moon. I'm gonna do this and that. You're just like, don't buy it. It's a shit coin. It's for my community. Just trying to have fun here.
Yeah. Yep.
Good stuff.
So it's just funny. So anyways, Axis is top dog right now. KEK is trailing, but it's still up 44,000% over there. So shout out to those guys too.
So you're winning.
I just had to put up the big dub. Nice. So for now, we'll see how it goes. Hopefully someone doesn't step in and dump like 35 coins.
I don't own any, so I can't dump it. So
some would say this is by design. Anyways, man, it's been a pleasure. We had a great conversation on all sorts of things, from macro to hex price to looking to hex, where Mintra is going, when it's coming, which we still think it's going to be 2 more weeks. We're all excited. A lot of talk about things going on regulatory front too, and man, it's been a great conversation.
Always a pleasure, Axis. Thanks for having me.
You bet. All right, guys, we'll catch you on the next one. Later.